Watch this video all the way through. I will be showing you my signals, my various trading models at the end of this video. I want to share some very important indicators that I'm looking at, slamming up into major resistance in the monthly time frame. Divergences galore everywhere, negative divergences. Show those to you. You're going to blow your mind when you see this. Make sure you watch towards the end of the video. I'm going to be sharing with you these signals. Happy Father's Day to all the fathers. A lot of indicators are setting up negative divergences, like right here. Again, divergences are forming after reaching extremes. So again, just something we're paying attention to. We do have those negative divergences in the weekly time frame. Bearish divergences on things like the McClellan oscillator for the S&P 500. It is diverging with the S&P 500 at this time. Stocks above their 20-day moving average doing something very similar here to the McClellan oscillator. Same thing here. Stocks above their 100-day moving average on the S&P, 46% diverging with the S&P 500. Same thing here. Stocks above their 50-day moving average, again, forming a divergence. But look at this. Again, we had this divergence over here. We sold off. Now this divergence is lower than that one, forming this larger divergence between the two. And again, looking very similar to the McClellan oscillator. So you've got all these divergences, the more recent price action and this larger one developing on stocks above their 50-day moving average, stocks above their 20-day moving average. Now, one of the problems here is we're making new all-time highs, but you only have 43% of the stocks on the S&P 500 above their 50-day moving average. You know, you've got 6 stocks controlling 1/3 of the S&P 500. Something is wrong if you are breaking brand new highs and you have more than half of the stocks on the S&P 500 not even above their 50-day moving average. Did you hear what I just said? Only 43% of the stocks above their 50-day moving average. Again, pretty good chance that if the divergences start playing out in the weekly time frame with the RSI and the awesome oscillators I talked about in great length and detail in my last video, and some of the other weekly indicators, the MACD and so forth, we could see these divergences begin to play out. But let me be clear, my signals remain bullish. Watch this video and you'll see my signals, momentum, and trend signals remain bullish. I expect that's going to change because it has been changing with the Fed meeting. Either we're going to get a continuation of the trend or we're going to get a reversal, one or the other. Rallied ahead of the Fed here with the Fed, have a bottom signal. FOMC meetings have been calling the turns. We have major resistance, as I've talked about, at these levels. These divergences are likely going to signal that we're going to see those divergences in the weekly time frame begin to play out. As I said, again, I call it a post-Fed sell-off. Post means after, okay? S&P, at the March peak, it peaked the following week. Still got the post-Fed sell-off, but it peaked the following week. We're probably going to see something happen surrounding options expiration next week. Again, probably lighter volume because we're going to have the holiday next week. It will be closed on Wednesday. Now, as I said, it's very possible the Dow has topped. It turned off a trend line up here that is 125 years old, from 1899, that is called other major tops. There, you formed this negative divergence with a potential double top, the Dow here in the upper window, the transports in the lower window, but we got the transports making a lower high, and you had a divergence there, a Dow theory reversal signal took place. I told you that we got the bottoming tail on the Dow, and we also got one here on the transports. It very well could be that we get a bigger retracement to set up a lower high at the 61-point Fibonacci in the golden pocket if the Dow has in fact peaked. Again, it could mask what's going on. If we start to see the Dow rally with this bottoming tail and yet see the NASDAQ and S&P begin to turn, the headline is going to be, oh, the Dow is soaring. We could begin to see distribution. The Dow has led the charge lower. The Dow's been dropping while the NASDAQ and S&P are rallying to new all-time highs. Just keep this in mind that you have this Dow theory sell signal, and even with the transports being here, if you look at the large caps with the S&P, they're moving to new highs. The transports are not. Got a Dow theory sell signal here with the Dow from earlier in May, and then you also have one currently with the S&P 500 both large caps with the Dow and the S&P. I've also talked about things like the equal weight. The equal weight, this is the equal weight ETF. Again, it's diverging with the S&P 500. This is making a lower high from the previous peak over here. We're making a higher high on the S&P cash. Currently, in our most recent price action, again, we peaked in May. In June, we're making a lower high here. And here in June, we're making a new all-time high. You have a double dose of divergences going on here with the equal weight. So again, 43% of the stocks above their 50-day moving average with the S&P making new all-time highs. Something is wrong. Picking up what I'm throwing down. So again, this is warning. All these divergences I'm showing you are warning we are likely going to see a reversal happen. This is we're going to go a little bit higher, but I'll be watching to see if momentum shifts. Those back-to-back bearish candlesticks, but they were not confirmed last week. Still think we're likely, as I talked about in my last update, going to go a little bit higher, form the divergence, complete a perfected 9-count sell signal at the 9-count. Early on next week, on Monday, we'll get a 9-count on the NASDAQ. We're seeing similar divergences with things like the AD line. You had a divergence previously here. I should probably have drawn that from this peak right here, but then now we're getting another divergence here in the more recent price action. Again, the S&P is going higher, but the advancing issues, the AD line, the advancing declining issues, is dropping. We have things like divergences all over the place forming on indicators. Here's the bullish and bearish signals for the NASDAQ 100. You get the same thing going on with the S&P 500. Divergences forming. I keep showing you this chart talking about Fed meetings continuing to call the tops and the bottoms and the continuations of the trend. This is either going to be a continuation of the trend or a top. Called the bottom the last meeting, called the top the previous meeting. Over and over again. Likely going to get a sell-off. The narrative is going to be, I told you that we're going to see the Fed lower the amount of rate cuts, the estimate for the rate cuts, down to 1 or none. Market did not expect that, expecting it to lower it down to 2. Eventually, again, the narrative is going to be Fed is leaving rates too high for too long, at a restrictive level, and they're going to cause a recession. That's going to be the narrative. NASDAQ stocks above their 100-day moving average, diverging with the NASDAQ, moving to new all-time highs, diverging in the more recent price action, and this larger divergence that has taken place. NASDAQ stocks above their 200-day moving average, diverging with the NASDAQ in the lower window. If we start breaking this mid-range, then we could see a reversal with the NASDAQ. We start turning down with the NASDAQ, it will break through this area and the door to a bigger drop. Reversal. S&P stocks above the 200-day moving average. Again, lower high here, higher high here. It's diverging. S&P did that at the, that was the NASDAQ. This is the S&P. You got the S&P, again, going higher, lower high here. And again, back over here, S&P went higher, yet we saw this divergence develop here at the peak, 2022. Above their 200-day moving average on the S&P. Please support the channel with the link directly below. That allows me to be able to provide you this information. You like the signals, you like the charts, please let me know that. Supporting the channel today. If you could take a moment to partner with me, I would really, really appreciate it. The money made on YouTube is through sponsorships, influencing and selling stuff. Influencing people to go to websites and buy things. I don't want to do that. I want to make merchandise of you. I just ask that you help out. Support the channel, having a direct relationship with you. If you like the charts, want this information, then please consider supporting the channel today. If you could take a moment to do that, I would really, really appreciate it. I need your help in order to make it work. Put it all out there for free and just ask that you can do what you can to help out. We need to hear from you in order to make it work. So please consider helping out today. I thank you for your consideration for that. The S&P 500 charts I showed you earlier with stocks above their 20-day moving average and 50 period. Again, NASDAQ's doing the same thing here. Multiple points of divergence with the previous peaks and in the more recent price action. All these divergences everywhere are market breadth indicators. S&P and NASDAQ are making new highs. Stocks on the S&P 500 and NASDAQ are not. You have a handful of stocks controlling what's going on. You got 6 stocks controlling what is going on. NASDAQ's making new all-time highs. You only have 55% of the stocks above their 50-day moving average. You have a divergence in this most recent price action. You have multiple point divergences previously from the prior peaks. One of the most recent price action here. Again, the same thing the S&P 500 is doing. The S&P, you only have 43% of the stocks above their 50-day moving average. The S&P is making new all-time highs. Something is wrong. Stocks on the S&P and NASDAQ are not moving to new highs as we see with the equal weight, but yet struggling to get above their 50-day moving averages, but yet you have the indexes at all-time highs. NASDAQ 100 equal weight. Here we have the NASDAQ 100 up here. The most recent price action making new highs. In the most recent price action, we're making a lower high with everything being equal on the NASDAQ 100. A larger divergence is formed with the previous peak. NASDAQ's moved above the March high. The NASDAQ equal weight has not. So you have these divergences that are forming. But let me be clear, my signals remain bullish. Have to start to turn bearish. All of these divergences I'm showing you with market breadth and divergences in the weekly time frame, if they're to play out, to see the daily signals. And we do have divergences in the daily time frame, as I've talked about. But you've got a bunch of warning signs all over the place that are signaling that a reversal is likely at hand. I'm not talking about just a pullback, but I'm talking about a reversal that will change the market from a bull market to a bear market. Seeing all of these signals form as we're slamming up into major resistance in the monthly time frame. I talked about this trend line in the monthly time frame. We moved just above that upper boundary on the weekly time frame for a recent channel, but I've been talking about this trend line for a very long time, going back to the 2000 high. Again, we're coming up to it, and we're just right underneath it right now. If we exclude the shadow, we've hit it. But right now, again, I think we'll inch a little higher, but we're slamming up into this major long-term resistance. Every single time a divergence has developed, which we have this massive one now, it has led to a reversal. The lowest amount of the decline has been 17%. Every time. It's led to the bear markets. The divergence is back over here in the monthly time frame. The divergence here 17%. The pandemic 20%. The 2018 sell-off 20%. 35% with the pandemic. Over here, this divergence 27.5%. And now we have this new divergence. And we're getting one in the most recent price action right here. Price is going higher. But we've got one here with the RSI making a lower high here in the most recent price action. I talked about that happening before it happened. I'm talking to you about this trend line. So again, it is highly probable that we're going to turn surrounding this area. We usher in a bear market. This is the longest bull market in history of the Fed, QE infinity and beyond, and the government giving us $5-6 trillion in stimulus with checks being mailed out during the pandemic. Valuations are at extremes, telling us that we're going to have for the next decade low returns or negative returns. Things like the Shiller PE ratio, things like the indicator, all telling us that we're going to have a couple of crashes over the next 10 years and usher in a bear market like we had right here, a long drawdown where you had a couple of crashes over a 13-year period. It wasn't until 13 years later that you went and made new highs after you peaked in 2000. That's what the valuations tell us. The Fed is going to pivot. With the pivot, it's associated with these drawdowns in the market, associated with the bear market. Now we're at the pause. I told you the pause is bullish, the pivot is bearish. But all these divergences are forming. This divergence is likely going to, multiple point divergence is likely going to lead to the reversal rather than just one of these sell-offs. It'll probably be the next bear market. Getting ready to happen as we're coming up to this trend line. And again, as we're going to go a little higher. We're just below this trend line right here. Perfected 9-count sell signal. I talked about it in great length and detail in my last update. Go watch that video. I'll link it at the end of this one. Tech will form a 9-count on Monday. We'll be watching to see, do the signals remain bullish? If they do, we go higher. If they start to turn at a good shot, you're going to start a reversal with this FOMC meeting and get a post-Fed sell-off. As we're slamming up into this trend line, you're getting all these divergences on the daily, weekly, monthly charts here with the S&P, and then you're getting it with market breadth indicators, divergence with the fear, greed index here in red is the S&P 500. It's moving higher. The Fear Greed Index has a lower high. Indicators that make up the Fear Greed Index are all diverging with the S&P 500. And I told you I was looking at social media and I was reading something that somebody said about the Greed Index being at lower levels. So again, the market's just getting started. And again, the narrative is that it's going to keep going on until 2027. Nothing's taken this market down when in fact, again, the Fear Greed Index is forming a lower high and it's diverging with the S&P, and you got a divergence in this most recent price action as well, just like I'm showing you with all the different market breadth indicators. The put to call ratio is forming, as the S&P is going higher, it's forming divergences. Look at the 10-day moving average of the put to call ratio, it's getting this higher low again, likely going to eventually begin to surge, which will mark a reversal on the S&P 500. Those option traders are overdosing on calls down here again in this area where we've seen tops develop over and over again. The total put to call ratio is the raw data has just recently reached the extremes we saw surrounding the January 2022 top. This is the equity put to call ratio. Here I've got the 10-day moving average in red of the put to call ratio, and again it reached extremes we haven't seen since the January 2022 top began to form late 2021. It formed a divergence, by the way, back over there. It doesn't have to do that here. We already have divergences. Again, we've reached these extremes, just showing complete complacency. Last update, I talked about the negative divergences that are forming on all the different indicators in the weekly time frame, forming these divergences like the RSI right here, but signals still remain bullish. Momentum is still bullish, and the swing trend signals are still bullish in the daily time frame. But we know meetings have been calling the turn, so we're either going to get a continuation here or we're going to get a reversal. I talked about that there's a boatload of resistance here in the weekly and monthly time frame as these divergences form. So I think there's a high probability we'll get the reversal scenario. Things have been calling the tops and bottoms and the continuation of the trend. 8 weeks ago, we very well could have a bottom here at the 20-week moving average and again establish a lower high or a higher high scenario. I've talked about these scenarios long before we ever even hit the week moving average. I've talked about the topping process, getting a lower high or a higher high for a divergence, one or the other. Getting the higher high scenario, and that's forming this divergence. It's going to produce a turn. It did in 2020. It did in 2022. It marked the bottom over here in late 2022. The divergence. It has produced reversals over and over again, tops and bottoms. This time is going to be no different. Said that again, my signals remain bullish. They turn back to bullish. They had turned bearish, began to turn back to bullish. I talked about the indicators as they turn back to bullish. They remain bullish, but divergence will likely cause them to change. Didn't watch my last video? Go watch it, because I talked about how the S&P got a 9-count sell signal on Friday. It's not a perfected signal. It's probably going to go a little higher. Stack is likely going to complete a 9-count sell signal on Monday. Short trading week next week with the holiday. We'll be watching the 9 counts if it forms on NASDAQ daily chart. And those are the daily charts. I want to go watch that video. If you didn't get a chance to see it, I will link it at the end of this video. Again, we saw the S&P sell off. Momentum turned back to bullish. The trend signals turned back to bullish. I showed you the risk model here back when it turned back to bullish. Remain in a risk-on environment. Again, we have negative divergences, but they have not yet played out. They're likely about to. We have negative divergences all over the place on the S&P, and as we do, risk-on is getting a higher low. It's probably going to turn back up and eventually move back into positive territory, moving us back into a risk-off environment. The trend currently remains bullish on the S&P 500. Risk line continues to remain positive. Divergences that I've talked about, weekly chart begin to play out. That could quickly change. I said in my last update, I think the S&P is still going to go higher. Perfect the 9-count sell signal. NASDAQ will complete a 9-count. I think that the Fed meeting will result in a post-Fed sell-off. I talked about the narrative being that the Fed is keeping rates too high for too long at a restrictive level. That will be the catalyst for the sell-off. And again, it could be a few other things, combination of things. But again, Fed meetings have been coined the turn. I'll be watching to see if the trend signal changes. I'll be watching to see if we move into a risk-off environment. Should those divergences start to play out in the weekly time frame. We continue to have the risk model in a risk-on environment. We'll see if that changes. We do have options expiration next. Now, I've been showing you that momentum has been negative while we have risen higher. I told you it would likely go into positive territory and end up forming a divergence. I've talked about this, and it's just barely in positive territory now. Again, you're above the 50-period moving average. You're not supposed to be in negative territory. And now, price is moving to a new high, but momentum is not. We have the same thing in the weekly time frame. And back over here, when we had corrections, it didn't move into the negative region. Here it barely did and then turned right back up. But here it didn't, and here it was there briefly. Probably going to be very similar to what we have right now. And again, drop below the 50-period moving average, drop below it, wasn't validating it, and then it turned back up. Here, we're turning into positive territory. We've been above the 50-period for a little while. So here we're forming negative divergence. Here we formed hidden bullish divergence, higher low with price, lower low on the indicator. I want to show you this in the weekly time frame because we're doing exactly what we did at the 2022 top. We're forming this divergence. Initially, we had a peak here, and then again, formed a peak here, went just a little bit higher, and you formed this negative divergence. We're forming a negative divergence right here in the weekly time frame. This is the S&P weekly. NASDAQ's doing the exact same thing. Again, it peaked in 2021, formed a divergence. It's doing the same thing right here, right now. Divergences on the RSIs, the MACDs, the awesome oscillators, all over the place in the weekly time frame. This is the NASDAQ weekly chart, NASDAQ 100. Venom is also forming a negative divergence in the daily time frame for NASDAQ. Again, it had just recently turned into positive territory. The S&P followed this last week here. And again, you had the negative divergence over here at the July peak. There's also a divergence present over here where we had the March peak. This is the NASDAQ daily chart. Again, momentum signals remain bullish. The momentum line is still blue. It's still pointing up. It's still bullish. The ribbon is still green. The cloud is still green. We're still holding above this line, representing the trend. When we had the sell-off previously, we broke it. Again, if we're going to turn, we'll see momentum turn first, and then we'll see the bars begin to turn red. They're still green, representing the trend. Momentum, I should say. And then we'll begin to turn here. And again, we've had momentum signals turn bearish, short-term momentum tops, and here, and the momentum line turning red and so forth. But again, momentum turned back to bullish. It was just a pullback, as I talked about. Still expected new highs to form and complete that divergence on the RSI, the weekly time frame. What I'll be watching for is, again, red bars, the momentum line to turn red and begin to turn down, and then I'll be looking for sell signals like right here, and not every top and bottom has all of the sell signals present, but over here we had none. It was just momentum signals turning. So I'll be looking at the circle right here. More often than not forms at turning points, formed at the bottom over here. I got the sell signal with the cloud flipping here. This gray area warned something was about to happen. It did, and we had to push down. Over here, we had the bullish signals there show up. We had momentum shift back. We had the momentum line turn back to blue, and then pull back or went up and got another one here, and then began to pull back. Got the back-to-back bullish candlesticks. Tried to turn red with momentum. The momentum line remained blue, but then it turned right back to bullish the next day. And then we got above this line right here. When we dropped below this line right here, we turned bearish on the sell signal, got back above it, and this line represents the trend. We got back above that line, then we began to see the ribbon turn back to bullish, and then after that, background turned back to bullish, reflecting the trend. So right now, everything is green, okay? And if we're going to turn, we'll likely see some sell signals begin to show up here, either taking out the cloud or, again, warning of a potential turn with some of these sell signals that showed up before the turn happened. It doesn't always play out that way, but you did have it happen over here. You did have it happen here as the turn was taking place. Could see that here. So I'll be showing you this chart throughout next week and see if any of the signals begin to change on it. But right now, momentum is still bullish. The trend is still bullish. We'll be watching to see if that plays out. Sorry, the negative divergences on the weekly chart of the RSI and with the S&P, with the RSI and oscillator, if they begin to play out, could see things begin to turn here. I do believe that we're going to go higher, as I've said. Again, we got back-to-back reversal candlesticks, but candlesticks have to be confirmed, and there was no confirmation. I told you we could easily get a divergence on Wednesday and Thursday on the 60-minute chart. I think that that is likely going to be the case. Through that in great length and detail in my last update. If we see momentum shift, bars turning red, momentum line turning bearish, then we'll be watching to see if the trend signals turn bearish. If so, we can have a turning point, as I've mentioned in my last update, with the Fed. The Fed meetings have been calling the turns. You expect a post-Fed sell-off. I've talked about it great length and detail. Post means after, okay? About it happening immediately after the Fed meeting on Thursdays or Fridays or the following week. You begin to see it over back in the March high. The NASDAQ and the Dow peaked the very next day after the Fed. But the S&P peaked the following week. Still, they've all got a post-Fed sell-off. Happened differently. One was the very next day on Thursday for the Dow and NASDAQ. The S&P, it ended up turning the following week. I'll be watching to see if that happens with next week with options expiration. I think that we could be up at the beginning of the week, but then sell off by the end of the week, start a reversal process. But again, let me be clear. My signals remain bullish. You're looking at my signals, and momentum is bullish, and the trend is bullish. Momentum will have to flip and then flip the trend signals if we are to get a reversal. So again, these are going to tell you exactly when that happens. I warned you in early June that something was about to happen. Here we had a warning sign that, hey, something was about to happen to the upside in all likelihood, and I told you we were likely going to go up towards that trend line on the weekly chart or even overthrow it, which we've now done, and again, complete the divergence on the RSI. So now, once the divergence is done, it'll likely play out in a reversal. I think you're going to complete the 9 count. I talked about that in my last update in great length and detail. Go watch that video. I'll link it at the end of this one. Now, on that other chart, I have the bars reflecting momentum. Here I have the bars reflecting the trend. And again, they started to warn over here that we're going to get a turn with the orange. And eventually it flipped to red. We took out, again, the line representing the trend. And again, the bars we saw on the other chart, they turned back to green sooner. When we got above this line right here, they flipped back to green and remained green up until we had this pullback. But we couldn't flip the signal back to bearish. The cloud remained bullish. We remained above this line right here representing the trend. Blue line is momentum, and again, during that time, we were just flatlined. It didn't start going down. It just went sideways, and then we resumed. And again, I told you we had a warning sign that something was about to happen. It happened. Went up to the levels I told you we were going to get a CPI rally and we were going to go up to new all-time highs. We did. And same thing here. I'll be watching to see if momentum begins to shift if we begin to top out. But again, like I said in my other video, I still expect higher prices for the 9 count to be perfected and likely for the NASDAQ to complete the 9 count come Monday. Momentum shift and then the trend signals begin to shift. The balance of power has remained bullish. That will change and go negative if we start a reversal, but you'll see momentum shift before the trend signals begin to change. Balance of power will validate the change. One other thing, again, with some of these topping and bottoming signals, here you see these little black X's give a warning sign of when a turn is about to happen. We started to get it right here, started to see some color change, but it couldn't flip the trend and signals reverted right back to bullish. On the other chart, the momentum line had turned bearish briefly, but turned back to bullish. Here we went flatlined, and then we began to turn back up, and we got that move I was telling you about. Something big was about to happen. It did, and it happened with that part right there, as I told you. And I warned you about that before it happened. So what I'll be looking for is, do we get any signs of any kind of distribution or reversal? We're getting warning signs with these X's right here, like we did over here at this bottom. And again, the circles of a potential coming turn. You might see some sell signals like we got over here. This was the day after the Fed meeting. And again, we peaked the very next week. And again, we got sell signals with both of those peaks with that little miniature double top. It can happen with every top and bottom. Here we got a bullish one plus the little circle. And then we got another one over here. It doesn't happen every time. But more often than not, these signals will appear at turning points and warn. And again, it warned, and then we got the sell signal with the cloud flipping. The warning here, again, little gray area warning that something was about to happen, and it did. We turned down. Over here, we got the warning with the gray area, something was about to happen. It did. We turned up. Over here, we got the warning, something was about to happen, and we turned up. I'm telling you what I'll be watching for, but again, let me be clear. My signals remain bullish. Divergences begin to play out in the weekly time frame. You'll begin to see momentum shift. Then you'll begin to see the trend signals shift. The bars will begin to turn to red here with reflecting the trend and also momentum. Momentum will likely flip first. Just wanted to show you again at momentum, and I'm looking at the trend. Now they're both bullish. I do expect a post-Fed sell-off as the Fed meetings have been calling their turns, as I've been showing you chart over and over. But I programmed the indicators to give me warning signs when distribution is starting, when a potential turn can happen. Be watching to see if some of those signals begin to show up as the divergences begin to play out on the weekly charts with the RSI and the oscillator. That I've done is I programmed momentum to shift down here when momentum shifts back down and up, going from positive to negative. And again, it corresponds shift in negative momentum on the chart, and briefly like over here. But right now, again, there's potential divergences forming on indicators everywhere. And so again, if that begins to play out, I will be watching to see if momentum signals begin to shift. Will it eventually be validated here? So I'll be watching that as well. Again, my signals remain bullish. Momentum is in positive territory. Everything's green. We'll get warning signs, some, maybe many, maybe a few, if a turn begins. So just watching those divergences in the weekly time frame. I went through them in great length of detail in my last update. I'll link that at the end of this video. Now, signals remain bullish here. Again, I've designed this to look at momentum and the trend together, but very, simplistic. Here, when the trend changes, so does the oscillator. And again, there is a negative divergence present. A momentum, here we had the trend shift, but momentum went back and forth from bullish to bearish in the downtrend. In the uptrend right here, again, a little bit of bearishness here, and then it resumed. I believe the signal is bullish. Momentum is bullish. Again, I'll be watching to see if momentum begins to change. It's going flatlined right now at the moment. Like I said, I do expect another push higher. Then I think that will complete divergences on the 60-minute chart. But it does a very good job of calling the turn in momentum and in the trend. I'll be watching